Hey everybody, Jack Lucky Mortgage Advisor here, and welcome to episode 4 of Mortgage Myths. In this series, I'm debunking myths that I've heard in my industry over the past few years, said by other mortgage lenders, sometimes borrowers, sometimes realtors. So let's get started. Mortgage myth number 4, FHA is the best loan out there for first-time home buyers. Uh-oh, shots fired. Hang on. Yes, I am going after all those other lenders and everybody that says that FHA is the golden standard of first-time homebuyer loans. And I am here to tell you that it is not the best first-time homebuyer loan. In fact, I would argue it's not even in the top 3. Now, to explain why this is, we're going to have to go over what the specific challenges are for first-time homebuyers. Number 1, the biggest challenge for first-time homebuyers trying to buy their first home ever, never bought a house before, is getting the 20% down payment, right? In order to avoid PMI, you need to put 20% down on your mortgage, right? Secondly, low credit score is often a barrier for first-time home buyers. And then last, lower income or high debt or a high debt to income ratio for a lot of first-time home buyers can be an obstacle or a barrier. Now, we're going to go over all the different loan options out there for first-time home buyers and talk about the pros and cons of these. Now, disclaimer, before I get started on this, the criteria that I'm going to mention here are the absolute highest possible criteria for these loans. Some lenders don't offer these options all the way as far as I'm going to be listing them. And also, it also depends on other compensating factors, as they call it. But let's get into this. So first off, let's talk about the FHA loan. First off, the FHA loan is for anyone. First-time home buyer, third or fourth time home buyer, low income, moderate income, high FICO score, low FICO score, anybody can get an FHA loan. The minimum down payment for an FHA loan is 3.5% of the purchase price, way less than 20%, right? The minimum FICO score for an FHA loan is 580. 580 is the minimum FICO score, so pretty reasonable there too. Mortgage insurance is expensive for an FHA loan. 1.75% of your loan amount will be required upfront as upfront mortgage insurance. Now, they don't actually ask you to bring it to closing. They'll add it to the loan and finance it in with the rest of your loan at your interest rate for your loan. So it doesn't feel like a big chunk, but it's added to your loan and it's financed in for the 30 years of your fixed rate mortgage. So it's definitely a factor. And then you also have the PMI, or in this case, MI, mortgage insurance, of 0.85% monthly. So that is the mortgage insurance for an FHA loan. And then lastly, the debt to income ratio. FHA does have a very forgiving maximum debt to income ratio of 57%. Now, again, as I said before, the minimum FICO score and the maximum debt to income ratio, not all lenders are able to do these things. Some lenders may have overlays where they have stricter guidelines than that. And also, these do depend on other compensating factors. Like if you have a 580 FICO score and you have a 57 debt to income ratio, that probably won't work. It might be one or the other. You may, need to show that you have a really good debt to income ratio if you have a low FICO score, or vice versa. If you have a really tight debt to income ratio, maybe you have a really high credit score. So that's FHA loans. Second option is Home Ready or Home Possible. Now, these are the Fannie Mae and Freddie Mac conventional loan programs for first-time home buyers. Although they're not technically only for first-time home buyers, you can use these loans if you're not necessarily a first-time home buyer. There are some guidelines there that I'm not going to get into right now. They are for anyone with less than 80% AGI, that's adjusted gross income, or average gross income for your area. And that depends on where you are. In St. Charles County, it's roughly around $60,000 a year is the income cutoff for this program. I think it's a little more than that, maybe 61,000, something like that. The minimum down payment is 3%, not 3.5%. So actually requires less of a down payment than FHA. The minimum FICO score is 620, a little bit higher than FHA. Mortgage insurance. This is where this one really stands out from FHA. There is no upfront mortgage insurance, and the monthly varies by your specific circumstances. Typically, your credit score is a big chunk of that. But suffice to say, for people with a better than average credit score, the mortgage insurance is typically way less than FHA. Now, they do have a tighter debt to income ratio. The maximum, the absolute maximum is 50% with compensating factors. So in some cases, it can get denied with less than a 50% debt to income ratio if there aren't enough compensating factors there. So that's home ready or home possible. Third, we have the VA loan, only for veterans. This one is very selective. It is only for veterans or surviving spouses of deceased veterans as well. This one has 0 down payment, no down payment required at all. It also doesn't technically have a minimum FICO score. Now, again, this is one of those things where it's going to depend on your lender if they require a FICO score or a certain FICO score for a VA loan or not, but VA themselves do not necessarily require a FICO score. Mortgage insurance for first-time users, for first-time home buyers using a VA loan, the upfront mortgage insurance is 2.3% of the loan amount or purchase price if you're also using the 0 down part. So this is the highest upfront mortgage insurance of all of these loan options. However, there is no monthly. So depending on how long you're going to keep that loan, this one can still even be one of the cheaper options as far as your mortgage insurance. And then lastly, debt to income ratio. So VA doesn't actually look at your debt to income ratio. They use a different calculation called residual income. And I'm not going to get into the specifics of this, but suffice to say that it is a pretty good calculation and it can really favor the military borrowers. And a lot of times you will see higher than 50% debt to income ratio being allowed on a VA loan. The last one is the USDA loan. Now this one is restricted only for rural areas, and they have a exact plat map for that. So you can know exactly which areas, which properties are qualified for USDA financing and which are not. And it also does have an income restriction. The income restriction for USDA is somewhere in the neighborhood of $90,000 for the St. Louis metro area. So this one also does not require any down payment, 0 down payment required, and the minimum FICO score for USDA loans is 580. It actually matches a lot of the underwriting criteria for FHA loans. They both have a minimum credit score of 580. And again, this is another one where it depends on your lender. Some lenders have overlays there and they require a higher credit score than that. Mortgage insurance. This one is kind of in the middle between FHA and VA. It's 1% upfront and 0.35% monthly, which is pretty low. In fact, when I do comparisons for people, when we're looking at either a home ready, home possible, which theirs varies, and USDA is usually cheaper on the mortgage option, on the mortgage insurance option. And then they do have the tightest debt to income ratio criteria. 46% is the max, again, with compensating factors. So there you have it. Here's my full breakdown of all the different loan types out there for first-time home buyers. You have FHA on the top. They have a kind of high upfront mortgage insurance, a kind of high ongoing mortgage insurance, the biggest down payment requirement of all these options. But their biggest benefit for FHA loans is that high debt to income ratio that they will allow and the low credit score requirement. In fact, FHA is the easiest mortgage loan to get into for most people, which is why it's kind of the knee-jerk, immediate go-to for a lot of inexperienced loan officers that don't know about all these other options or aren't confident in their knowledge around these, that they can get their borrowers into them. Home ready, home possible is an excellent choice. I would say above FHA. I always look at these first before I go to FHA to see if I can get someone in these programs, because the mortgage insurance is usually less than FHA. the down payment is less than FHA. And also, I didn't mention this in the slides, but the PMI for Home Ready and Home Possible can actually go away once your loan gets less than 80% loan to value, or once you've paid down the equivalent of a 20% down payment on your house. That mortgage insurance will go away, whereas with FHA, it does not. VA loans, as you can see by all the NAs on here, they're very flexible. This is an excellent loan program designed specifically for our veteran borrowers. Because of their service for our country, we give them a special option for first-time homebuyers and ongoing purchases, ongoing mortgage options in the future. It is a very good option for veterans, but it is only for veterans. And then lastly, USDA loans with the lower upfront mortgage insurance, the very low MI, probably the lowest of all of them, the low down payment score, the low FICO score requirement, but a little bit higher on the debt to income ratio. So as you can see here, there are a lot of other options out there, and it just depends on your specific situation on which loan type is going to be the best for you. And for me, in my business, I look at the FHA as the last option. I look at all these other options first before I put someone in an FHA loan. Not that there's anything wrong with FHA loans. It's a great loan product and it fits a lot of borrowers, but I do not immediately go to that whenever I'm talking to a first-time home buyer. And if your lender does, that might be an indication that you're dealing with a less experienced loan officer who doesn't know all the different loan types out there and isn't really looking to put you in the best product for your specific situation. In fact, after looking at this chart and thinking it over, I would say if you're not a veteran and you want the best loan type with the lowest mortgage insurance and the lowest down payment, come on out to the country, y'all.